Welcome to the VACO Premier Partner Spotlight. I'm Dean Lynch, Executive Director of the Virginia Association of Counties. Today we're here speaking with Joe Rulison, the CEO of 3+one. 4 years ago, the Virginia Association of Counties partnered with 3+one and endorsed their patented liquidity solution, CashVest. CashVest is used to analyze a county's cash position at any given point and presents data on the opportunities in the marketplace to provide the maximum available value of the public's money. This is a very important service, and we are very proud of our partnership with CashVest. One thing people may not know is that Joe has a tested track record of accuracy on annual outlooks, and we are looking forward to jumping in and getting a feel for what he is seeing in the marketplace for the remainder of 2024. Joe?
On behalf of 3+one and the CashVest liquidity platform, really want to thank you, Dean, for the opportunity and that also VACO to be able to provide an economic update to my forecast that I've provided since last December. And it has definitely been a time that I would say could not be more perfect to give an update. So many things are occurring. And as you'll see at the last two very guarantees that I give you that you can count on for this year, you'll understand why I've been saying what I've been saying, and that I think my outlook has been pretty much right on the mark. And part of that is because of my approach. I just want to let you know, my approach is more of listening to Main Street, monitoring Main Street rather than the pundits of Wall Street. And what I mean by that is that it used to be so well said by Peter Lynch that if you go out and look to see what people are buying, if you go out to see how people are behaving on Main Street, what their tendencies tend to do, that gives you a pretty good idea of where you think the actual economic outlook is taking place. And that's exactly my approach. And right now you're seeing where the last couple weeks, you've had different variations of thinking, especially with the Federal Reserve. There's so much pressure by Wall Street and the pundits to get the Federal Reserve to reduce interest rates and to reduce costs that they continue to put pressure and use any possible event to try to put the pressure on the Fed to do so. Great example was yesterday we had a stock market that had shown some great pressure actually the last few days, and everybody's saying, oh my gosh, we're going into a recession. Oh my gosh, the market's going to be going down for a major correction, and the Fed's got to come for an emergency cut by 0.5 point. And it's that kind of pressure that you're seeing that's created within Wall Street, not by Main Street. And therefore, I sort of sit back and I observe and just sort of continue to say that I think that the economic fundamentals have not changed. Here, they're talking about recession, but yet GDP 2 weeks ago showed great growth of 2.8% for the second quarter of 24. And while others are saying there's going to be a recession, I'm going to tell you there's not going to be a recession. And we'll go into that in a little bit. But I just first wanted to sort of place a little bit of emphasis of what my thinking is, and also just let you know what I think has been happening in the stock market. Has been a select number of stocks that had really become very overblown, and just some air is being let out of the balloons. And I think that's a healthy thing to occur and helps level set where the overall thinking should be in terms of the stock market, and also continuing to reinforce the fact that I don't think the fundamentals have changed. First of all, let me tell you that every single dollar that you have in your wallet has a value above $1. Many of you being within states that have liquidity pools, you're still seeing 5% in the local liquidity investment pools. With that being the case, just keep in mind that every single dollar has value, and you want to make sure that every dollar continues to be invested. Not what you think should be invested, but what actually should be invested. Right now, with having taxpayer dollars, those dollars have to be put to work. And that's the money that's able to help meet budget gaps, able to make up for what's inflation, able to pay for things that otherwise may not have been able to be paid for, whether it be raises, whether it be for parks or frontline emergency, whether it be for technology. The value of the dollars that you have in general reserve and with capital is so important to take advantage of that while you can. And where rates are, cash is still king. And with that being the case, that cash has value that can have a great impact right back to your budget. So much so, it could be able to take care of what a tax levy increase may be for 2025. So just very important that you keep that in mind. And you're going to see that my overall thinking is to continue to emphasize the value of cash and why I continue to believe cash is still, the dollar bill is going to still have greater value in terms of what that means in terms of into the pockets of your public entity. As for inflation, so many are saying that inflation is coming back to a point that with the Federal Reserve, they want to get it down to 2%. The Federal Reserve believes that they're seeing it come down close to that 2%. Again, on Main Street, what we see, there's a major disconnect between what we see and what they see by the Federal Reserve and by Washington pundits themselves. All I know is that when I go into the grocery store, when I go into a restaurant, just when I got dry cleaning, everything has been going up in costs. Matter of fact, I'm seeing things that are still averaging about 5% a year in terms of increased costs. And that's above the 2% that the Fed's looking at. I was looking at the numbers, and when they come out with the inflation numbers, I sometimes wonder, how are they coming up with the figures? For example, for all of us, I was looking at the latest inflation numbers just in July, and they're saying that healthcare costs are down, healthcare insurance is down 4.2%. Anybody that can show me that insurance is down 4.2%, I want to know, because with our group alone here in Rochester, New York, we're seeing a 12 to 14% increase. And so when I look at insurances, when I look at the grocery store, when I look at all the various services, I'm still seeing an inflation that is above that 2%. And that's going to be a challenge for the Federal Reserve. And I want to make sure that what we see in this case with inflation is that, yes, want to have it come under control, but I don't believe it's going to get close to that 2% like the Federal Reserve and the pundits are hoping, in fact, is going to occur to put pressure on interest rates coming down. As for a recession, 2024, there will not be a recession. I said this last year. I said this in 23, and I've had so many economists come back and say, there's going to be a recession. There's going to be a recession. Of a recession. I just don't see it. I believe there's still a lot of money in the system to be spent. People are still buying. The restaurants are still full. The airports, I have to tell you, are jammed. We're also seeing where there's still a lot of infrastructure work, and the money from Washington for infrastructure is just now starting to be spent, along with the ARPA dollars as well. So there's still a lot of money for growth to occur, and that's why 25, we're not going to see a recession. Now, there may be points of anemic potential for growth, and everybody will be saying, oh, recession's coming. I just don't see it. And to have a GDP number 2 weeks ago that was 2.8% positive, and all of a sudden, 2 weeks later, you've got pundits saying, oh, we're going to have a recession, The fundamentals have not changed to that degree that I think that that's going to be the case. So I continue to say that I don't believe there'll be a recession in the remainder of 24, and I certainly don't see one into 2025. One of the things that you're seeing is wage growth. And one of the reasons why we're seeing wage growth is that the unions have been having some greater and greater impact in negotiations. And for public entities, this is going to continue to be something you have to be cognizant of. The unions have been winning different agreements, and they've been seeing wages increase actually above inflation. And that's something that's going to continue to be a challenge for all of us, especially as you look for where it's going for the annual budgets that you have to deal with. You're looking at healthcare costs that are going to be into union negotiations, and you're going to be looking at above inflation averages for the union concessions. So I just want to let you know they have been winning. They have been more powerful, and you're going to find that this is going to continue to be a overall theme going throughout 2024 and into 25. The next area that I think is of great interest and keeps coming up is green energy. As I say, and this is extremely important, green energy initiatives is not going to be dictated by government or dictated by what happens in communities. It's going to be dictated by the consumer. What I mean by that is that as much as green initiatives are going to be placed out there, it's going to be based on what the consumer actually is willing to buy. And why that's so important is that you're seeing, for example, a couple of weeks ago, Ford had taken and brought down a whole factory that was making EV vehicles. And they're going to turn it back into an F-150 truck manufacturing, all gas. So you're seeing where GM said the same thing, is that our consumption of cars is not going to be based on what we're telling consumers to buy, but consumers will tell us what they want. And right now you're seeing a tremendous number of EV on parking lots and in dealerships that they're starting to give more incentives because people just don't want to buy EVs in the demand that Washington and the states and communities have been pushing for. You're going to see, I think you'll see more of a hybrid, but the same thing's going to happen with solar, same thing's going to happen with air. Different initiatives are going to be placed. And at the same point, it's going to also be dictated on what the cost is going to be to convert over to green energy. Costs are substantial. Great example for New York State. If we were to do everything the governor wants us to do in terms of becoming a green energy state, it will cost over $3 trillion. That is over 15 times the annual budget of the state to be able to get up to the point that we could be green energy. That is just not going to happen. Financially, not possible. Financially, not sustainable. So there's going to be some way that we grow into this and we work together to try to make sure that we have green, a strong green policy, great control over climate control, and that we just work together as a community. But just know that there's going to have to be a way we grow into this. The final part for the school buses are a great example as well. A number of the states have been saying you're going to go in and going to have electric school buses. Electric school buses don't work under all environments, especially, for example, up here in upstate New York, where it gets to below 0 degrees. Electric buses cannot handle it out in the rural areas that one would anticipate could within city limits. So with that being the case, we'll just have to see what is going to be sustainable, what the consumer wants, and that's going to be extremely important from how you look at the green energy initiatives. The next area that I think you look at is with the regional banks. The regional banks are extremely important in terms of the financial stability of our banking system throughout the country, besides the large banks. But the regionals have had greater scrutiny around them, especially given what we had last year that had to do with a couple of regional banks that had major pressure and had to close down and were taken over. As a result, there's continuous scrutiny. You have the feds and you have observers keeping very close watch on the banks, becoming tougher on them, and the expectations of what capital they need to keep and how they're managing their deposits. I do think you continue to see some bank mergers come up in 2024 and probably in 2025 in terms of trying to build greater strength, trying to have a scale of efficiency as well. Extremely important. We want to be supportive of them, and at the same point, make sure that you monitor them so that they are of the value and of the quality of bank that you're looking for, especially with public deposits, is extremely important. The next area that goes into this are the rating agencies. The rating agencies are so important. And because of what occurred back last year with the banks, the rating agencies have had to really be that much tougher in terms of looking at the banks that they review, also with the public entities that they review. And as a result, you're finding that the rating agencies, which are incredible entities are going to have expectations of making sure that they're dotting the I's, slashing the T's, so they're giving the very best outlook on those that they are providing the outlooks on. So as a result, I just want to tell you that that's very important. Now, one thing that is important that I have to say is your liquidity is going to play a major part in the outlook with these rating agencies. Now, the rating agencies look at 10% of your rating is going to be based on how good is your liquidity for your public entity. How are you looking at it? How are you gauging it? And how are you looking at it in the future? Having that data, having it ready, and having it ready for preparation to the rating agencies can make a big difference in terms of your outlook and also how the rating is actually provided. And that is something very important that we keep a close watch on, and something that you should as well. The next area that I think is very important is how you look at the immigration flux. That's having a major impact on local communities. And this has put an added burden that was not necessarily budgeted for 24 and especially into 25. And this is something that's going to have to be looked at and continue to look at throughout, not just a local basis, not just a state, but on a national level as well. The influx of immigration within the countries has impacted every single state and has had big impact in terms of social services, has had a big impact on health facilities, and also on educational institutions. And this is something that's going to have an impact on your budget going into 2025. So it's something to be aware of. It will be interesting to see how Washington steps in to continue to help with this influx, and something that you should be very much aware of. The next part is what are we seeing on higher ed? And for colleges and universities, 2025 is a very difficult year. The reason why is there's less students that are going to be going to college and universities in 2025. This has been an outlook that I've talked about for the last 6 years. Reason why is that given the financial crisis of 2008 and 2009, the individuals that were going to have babies at the time decided to hold off because they didn't know about the financial future. So as a result, they did not have the babies at the levels that they were planning to start families in 2008 and in 2009. So as a result, we saw a decrease in the number of kids that have been coming into secondary school and going right up into higher ed. That means higher ed has a smaller pool of students to pick from. And at the same point, with all of the talk about loan forgiveness, with all of the talk about the cost of higher ed and what it means to go to a four-year school, there's been a greater emphasis towards the technicals, towards the trades, different types of areas that actually has helped the community colleges, where they're actually seeing an increase in enrollment versus what they've seen as a decrease over the previous 5 years. But now this is catching up in terms of lower enrollment for colleges and universities. That means you're going to see some additional consolidation. We're seeing that already. You're also going to see that they're going to have to sharpen their pencils in terms of the discount rates they provide. And it's going to be more competitive for the colleges, not for the students in terms of getting into the schools and who they're going to admit. Should be a great opportunity for those who want to go to colleges that had thought that maybe some of the schools that they're going to go to could have been out of reach for academics or for financial, may have a greater opportunity in 2025 and 26. So we'll have to see. There's still a lot to unravel there. We're keeping a very close eye. We love higher ed, have served on a number of higher ed boards, and the value that they bring to the communities, the talent that comes out of those universities and colleges, as well as community colleges, make us so strong and play an important part. What also changes, though, is what's the mix of the new type of worker. And this part, I think, is extremely important. The new worker that you want to pursue for public service are those that are going for their second career that are the ages of 55 to 75. It was interesting. There was just an article, I think it was in US Today, that they were stating that workers still want to work up into their 80s. One, they don't want to, they get bored and they want to go back to work. Two, a number of them that had thought they were planned and did well for retirement planning don't have the dollars for retirement they had anticipated and need to go back to work to supplement the retirement or supplement their lifestyle. As a result, you're finding these workers that end up at the age of 55 are still very active and have a good 20 years worth of work opportunity in front of them. They have been seasoned, they're disciplined, they show up on time, they are loyal. And so you'll find that this kind of a worker could be exceptional opportunity for you to pursue. So as you're looking, and one of the biggest challenges for public entities right now is finding individuals to fill the slots that you have open. Across the board, we are seeing where there is a big void for public service. And I have to tell you, millennials and Generation Z, that's not their top priority at this point. And this is where we go back to colleges and we go back to secondary school. We have to start educating our kids early on as to the opportunities in public service and what that means. One is giving back to our community. Two, giving student loans that if you work for a public entity for 10 years, it can be student loan forgiveness. There's a lot of reasons for them to look at this as an opportunity, but right now we're not seeing that segment wanting to go into public service. So what do you do to fill the gap? I'm telling you right here, those individuals that are 55 to 75 are the perfect person for you to pursue. You have to go a little bit differently on how you're going to approach them and how you're going to reach out to them. Will tell you the two areas that are very strong in terms of social media is Facebook and LinkedIn. Those two are very strong for this age bracket to go after. And I have to tell you that I think it is very exciting as to what we see from that side. What I have to tell you is that there are two guarantees I can tell you that we can absolutely guarantee you for this year. And it has been very much the case throughout 2024, that this is going to be the most unpredictable year of modern times we have seen. And we've seen that already. I gave this talk at the National Association of Counties annual conference in Tampa just over a month ago. And I said exactly that. And then all of a sudden we had things unravel from July 13th to 20th, that people are saying, how this is so unpredictable. How could you have even suggested that you even knew this was going to be so unpredictable? That's just the beginning. I am telling you, there's going to be other things that unravel that are going to surprise us. There's an element of so many uncertainties that are taking place and converging all at the same time that I think what you think you see today and what you expect the outcome to be for the end of 2024, that is not going to be the case. It's still very unpredictable, and it's going to be something that's going to really be most unpredictable of modern times that we've seen. But there is one thing I can tell you with absolute certainty, and that is cash is king. As I had mentioned to you before, every dollar has value. And cash, even with the uncertainties of whether inflation is up or down, whether interest rates are up or down, whether the economy is going strong or in a recession, any of the elements I've gone through, it still comes back to the value of cash. And that cash that you have means everything. And that's what we do at 3+1 with CashFest, is just make sure every dollar you have is in fact able to be, you can look at it, you can see it, you can make sure every dollar is earning the money necessary, this taxpayer dollars that can go right back to your community and make the difference. Nothing can be more rewarding than a taxpayer coming up to you and saying, have you done everything possible with the money that you have in your fiduciary responsibility of ours to make sure it's going to make our local community stronger? And when you can say, yes, it is, every single dollar is working for us, that says so much about making sure that you have money to do of the initiatives that you're looking out to do for 24 into 25. I continue to believe interest rates are going to stay at a healthy rate, a little bit higher than what people are anticipating. I do expect the Fed will probably be forced, who knows whether politically or not, probably be forced to bring rates somewhat down. But I will tell you, I don't think they're going to come down as fast as what people think. And what that means is dollars are going to continue to be of great value. You want to take this information and use it so you can protect yourself, not just now, but over the course of time. And at some point, the interest rates may come down. You want to make sure you've locked in so that you've locked in for the next year, 2 years, and that you're making sure the stream of money that you're getting off the cash you have is in fact using to the benefit of your public entity. So important for all of you to know the value of this and to know that we're always here to be of help. At CashFest by 3+1, we just want to make sure it's a platform that has been sponsored by VACO and by NACO, that it is something for you as a public entity to take and be aware of, to know that it gets the recognition it deserves, and that every dollar that you have is in fact working on your behalf. It's an interesting time for us. It's one that we look forward to. I think what's going to be an exciting rest of 2024. I think it's going to be exciting in 2025. And I think the outlook still looks very bright for all of us. You're going to see different points in which the pundits are going to give you a lot of uncertainty or going to put a lot of uncertainty out there. But we're here at any given point to provide, an overview of what we think is reason, what Main Street is thinking, and what we think is very, very just a great opportunity for public entities, especially throughout the Commonwealth of Virginia, to take advantage of. And so I just want to thank you, Dean, so much for this opportunity today, and for all of the members of VACO for allowing us 3+1 to just give an economic update. And more than glad to be available if you ever have questions. Anytime you want an additional update, we're glad to do that. And I just want to say thank you on behalf of all of us at 3+1.
Joe, we appreciate you joining us for this presentation. Your attention speaks volumes about the dedication to bettering our counties. As we conclude, let's carry forward the insights gained and continue working together to create stronger, more resilient counties in 2024 and beyond. Please know that Joe is available anytime to answer any questions. You will find his contact information in the description of this presentation. And now, to each of you, thank you for watching and for your tireless efforts and passion in making a difference for our Commonwealth's counties.